Okay, so finally, August 1st, 2018. So my TD hacking strategy journey start today. So this morning, I purchased the 75 share TD stock shares at around 77, I believe it was around 77.11 cents, $77.11. So this is more than $5,000, and I would like to. I want to say it. I will always use $5,000 and the first trading day close the price to discuss my investing strategy, because the whole purpose is to explain how I understand the value investing, how I apply the the common investing principles into my investment process, right? So I would like to use the round number $5,000 and always use the first trading day. But personally, I actually will invest more than $5,000 every month. A reinvest actually is a reinvest into my investment portfolio, but I just use $5,000. So I just want to tell everyone I use this number, and the trading the first trade every month, the first trading day close the price to discuss this strategy. Okay, so but everyone understand the whole purpose is to discuss the investment principles and the logic behind the strategy. Okay, so today I would like to give a couple of things about. So obviously, this price TD, this price is the highest price in 150 years. So I paid the highest price to buy TD stocks in 150 years. And why? Okay, so I would like to give something. Price is what you pay. Value is what you get. So I paid $77 per share for the TD stock. So what is the value I get? This is what Warren Buffett says. Warren Buffett says, price is what you pay. Value is what you get. So when I pay a price, I know what kind of value I get. If you look at the TD, the investment document, I can see, the TD as a business, they have very consistent the dividend growth and the profit growth. And this is a very good number for 11% annual for 20 years. This is really, really a good number. If you check the dividend history from since 2000, it was only about 10 cents per share, the quarterly dividend. And today is 67 cents. And I like to see this year in the first quarter, TD increased the dividend by 12%, almost 12%. I believe it's 11.8%. And a couple months ago, I received my salary increase letter. They increased my salary by 1%. Let me repeat it. I received a letter. The company increased my salary by 1%. And TD increased the dividend by 11%. And they have been doing this for 20 years at 11% level. Think about this. Okay, so that's the first thing I'll do. Price is what happened. Okay, also I'm talking about the valuation. This is the Morningstar.ca, and I checked the valuation about TD stock today. I can see TD is the highest price in history. However, if you compare to the TD 5 years average, the PE ratio is almost at the mean level. So it's a reasonable price. It's not cheap, It's only a reasonable price. A little bit above the average mean, but still at a reasonable price range. Then the question is, of course, you want to, if you can pay a lower price, will be better. But this comes back to Warren Buffett's another suggestion. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. I think this is very important for many investors. And obviously, human being only can think about short term. And a lot of people will, when after they purchase a stock, they always expect the price go up tomorrow. A couple of days ago, actually last month, I watched a video and someone talked about, the poor man, in the street, the beggar, they only can think about next meal. They only can think about next meal. The typical middle class only can think about next paycheck. And then the small business people only can think about next month. And the rich people, they always think about long term, 5 years, 10 years, even 20 years. Why you want to buy a wonderful company, even at a fair price? Just because a wonderful company can grow their business for many, many years. And the compounding is magic. It's a nuclear weapon in stock investment. It's a nuclear weapon in stock investment. That's why this is a very good principle you should apply into your own investment decision-making process. Also, if you look at Charlie Munger, he said, over the long term, it's hard for a stock to earn a much better return than the business which is underlying it earns. If the business earns 6% on capital over 40 years, and you hold it for that 40 years, you are not going to make much difference than a 6% return, even if you originally buy it at a huge discount. This is maybe it's very difficult for the beginner to understand it, but basically it says if it's a great company, if you pay 5%, 10% more or less, it's not a big deal. From long-term, only from the long-term perspective, it is not a big deal. For example, for TT stocks, just give me 1 second. Charlie mentioned 40 years, so I give her 40 years. Sorry about that. Give me 1 second. Okay, so for 40 years, so 10,000 investment, you will get close to $5 million. So think about If your investment will give you 500 times more, it's not a big deal. You pay 5% more or 5% less, even 25% more or 25% less for the year. Of course, this is a very long time, but you need to understand the logic why it's more important to think about the business, think about the business long-term potential instead of the stock price alone. Okay, so that's basically, this is what Charlie Munger tried to teach us. So today, when I purchase TD stocks, so I use the common sense in the, I'm talking about the basic investing principle. First, price is what you pay, value is what I get. So I pay a price, I know the value about the TD, so this is what I get. Secondly, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. So that's another reason why I want to invest in TD, because it has a very long term consistent performance. And I also use the use the Charlie Munger's the principle into this investment decision. And lastly, I would like to say, at one time, Charlie Munger said, to get what you want, you have to deserve what you want. The world is not yet crazy enough place to reward a whole bunch of undeserving people. So, if you want to make money in the from the stock market stock market, you have to ask this question: do you deserve it? How much you know? How much time you spend? Try to understand, study the market, try to understand, and how you apply all the basic investing principles into your own investment management process. Okay, today I just talk about the three principles I use, how I actually apply these principles into my own investment.